Good morning, everyone. Welcome to Admiral Markets. Thanks for joining us. Glad to see everyone here on this 23rd of June, where we take a look at Forex market, a technical analysis at the currency pairs, and specifically today at moving averages, of which mainly actually the EMA, exceptional moving average. I would like to ask you to verify if you can hear me properly. I have a new headset, and I would like to test if it is working okay. And in the meantime, let me move over and show you this disclaimer. The webinar here is intended for a global audience. It may not be suitable for everyone. To find out if it is and other conditions and details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and other financial markets are considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. If you're continuing watching this webinar, you agree with this disclaimer. Good. So today's focus is technical analysis using in my vision primarily the EMA, but that would not be necessarily the only thing I will be using. Sometimes candlesticks, moving average, trend lines, fibs will also be used to make an analysis and determine the trend, look for opportunities, see if there are any filters, triggers, and entries. Alrighty. Before we do that, let's take a quick look. We have negotiations probably going on. I didn't read today what exactly the status is between Greece and the EU or the IMF, but does anyone know more about that at the moment? We do have, of course, the euro is therefore a bit vulnerable to news like that, whatever the news will be today or this week, but we do have a PMI as well in 40 minutes. And otherwise, no pound news. We have dollar news, home sales. That's about it. Alrighty, now let's move over to the chart. Good. So let's take a look at euro dollar and pound dollar, and we can move on like that. Good morning, Jen, and thanks, Wei and Sunny, for the confirmation. So the euro dollar made that upside break last week, but it didn't really break all too far before we got a correction like this. It was still above this trend line, but then we're breaking now below that trend line. So it's getting some kind of bearish correction. This could still be support. Let me actually put on the moving averages. You can see that this could still be some support level close by. How deep this correction will be is the question. But at the moment, we are getting a retracement. Basically, from a moving average point of view, we're actually breaking below this 21 band and moving to the 144 EMA, because those are the EMAs on the chart at the moment, the ones I'll be using for today's webinar. 21 EMA band, that's a high, low, and close, and a 136. Okay, 136 EMA close. 136, 144. It's about the same anyhow. All right, so we're breaking below the band and getting back to the moving average. Basically, there are two types of trades with moving averages. Away from the moving averages, which is with the trend. So when the moving averages are aligned, let's say the 21 is above the 144 in this case, then this is with the trend setups. Or one could trade it back to the moving averages, and those are then reversal setups, either to the 21 or from the 21 down to the 144. This is kind of like reversal, the first reversal, and this is the second reversal. All right, so that's how you can basically use those moving averages to identify potential trades. Now, obviously, trading back to the moving averages is a bit riskier because price could be slow, choppy, especially in part one. Part two has a bit better odds because you typically see more momentum on average. Trading it away from the moving averages has its advantage because price could accelerate away from moving averages. We don't know. Sometimes it really goes far, especially if there's a big momentum or wave three for people who like wave analysis, then it could really push. So that's one advantage of trading it away from the moving averages instead of back to the moving averages. There's also one more environment that could happen, obviously, that is not so interesting for moving averages is when price is doing something like this. A range basically, and then the moving averages go flat. That particular, price action up, down, that gets caught in the moving averages is a range, is choppiness, and is not interesting for moving average traders most of the time. I mean, it's technically still possible, but it's not the most pleasant. It's difficult. So this is how you can use moving averages to identify potential trades and with the trend or against the trend. Now, how to trade it is another story. We'll dive maybe into those details a bit later. But you can think about, for instance, trading breakouts above fractals. This is maybe not the best example, but fractal breaks, or waiting for candle highs or lows to be broken, or trading actually really waiting for the close below or above the moving average. Now, in this case, there's a candle close below the moving average, but we slammed right into the target, so that would not be so handy. So that's not really a reversal setup because there's no gap, no distance between those moving averages when trading the reversal. So those are a couple of ways to do that. The other method would be actually not to use it as an entry, but more as a analysis, like where is the space? Is it to the upside? Is it to the downside? And then look on lower time frames for exact entries. All right, so that's just some background info. Now let's use that general first kind of general introduction and apply it to today's currency pairs. Okay, the euro dollar is heading back towards the support, the moving average, and the support level. So it could fall a bit more, but a lot of space. I don't think there is a lot of space. 112 perhaps. Now it's at 112.50. Not a ton of space, right? Let's take a look at the daily. The daily chart, you can see it's kind of boxing against the 136 EMA, the long-term moving EMA. Actually, here it reversed to the 21, then it broke above the 21, it went to the 144, right? So this is reversal 1, this is reversal 2. On the daily chart, interesting, isn't it? Then we got another retracement, and now it's getting kind of caught in a wedge. It's being held back by the long term, and it's being supported by the short term. So the euro dollar is not in a very interesting spot at the moment. It's kind of being squeezed. So there's not a lot of space at the moment. In a weekly, you can see that three-wave move, the correction on the daily is actually just a move back to the 21 band on the weekly chart. Therefore, this could be certainly a serious spot for reversal. Although from a fib point of view, by the way, I would expect still actually a kind of a mini spike through this and then to hit the 38.2 fib and then down. That's from a fib point of view. Last week was a bullish candle, and looking from a candlestick point of view, we're testing that weekly low, which certainly could be a bouncing spot. So if it does get a bit closer to 122, I think it could be an interesting long, but not right now. From a 1 hour point of view, we're actually getting a crossover here. Those are always a bit tentative in the sense that when you get the crossover often enough, you'll get a bounce back to the 21 band. Very typical. So you will see this accelerate from the band, but I wouldn't be surprised to see it bounce back to it. So And you can see the interesting part about these moving averages is that they all give the kind of stage where price is at the moment. You can see on a 5-minute chart, there's a bit of divergence already. There's only single though, so it's nothing to be very worried about. The downside could certainly continue, but you can see actually at the moment a pretty good gap between the 144 and the 21, which is actually, I think, increasing the likelihood of more follow through before we get the correction. Pretty sustainable, a pretty sizable gap between those moving averages. So pretty good momentum. So I think that momentum has a high chance of continuing. Plus, if you look at the hourly, we just posted a new high, a new low here, excuse me. So I think we can see follow through to 112, and that could be a bouncing spot. But of course, we have Euro news, so we have to see how the news effect will happen. Um, the news is its own kind of world, its own universe. So we'll have to see how that news event, how it will impact it, where will it take price. But if it does take price up, it could still indicate the potential for, I would say, follow through to 112, considering the momentum we're having at the moment. It's not really a very interesting spot, I would say, personally. Let's take a look at the other pairs if they're set up a bit better. By the way, for those not aware of it, this is Admiral Markets Supreme Edition 4 MT4. And we just wanted to let you know that there are a lot of things you can look at, like a correlation metrics and a mini terminal. And the mini terminal is handy because you can trade off of this immediately, which is a lot faster. You can actually see the sentiment as well. Let me put that on. So there are a lot of cool things here, like sentiment, trader, and the session map, trade terminal, sorry, mini terminal, um, correlation trader matrix. So take a look at that. It's pretty handy to have it right away on the chart that you can trade it. Here you can see the sentiment trader, 43% long, 57 short. So there is a short bias at the moment. Correlation matrix will show you actually the various currency pairs and how they're behaving with each other on different time frames. You can see, you can change it from H1 to daily or 4-hour. You can see how much the euro dollar basically is correlated with the pound. So at this moment, basically you can see that there's not, the New Zealand is kind of neutral. Here you can, if you click on it, you can see that there's a weak negative correlation. So there's some explanation if you click on it. Here you see, as I said, with the Kiwi, it's -4, so there's little or no correlation. So you can play around with those tools. I think it is, Caitlin. Certainly, if you have a live account, if you have a demo account, I am not 100% sure actually. But perhaps yes. I'm just not sure. I have to check it out. I mean, maybe best to send an email to support, or or you can try it out and see if it works. Let's see. There's a question from BT. Can you use moving averages to identify the bias for the day? Means prices will go up or down for the day. Well, I think you can at least establish, to a certain degree, yes. Um, it's, I think, very handy as a support and resistance tool. It's very handy for identifying the kind of sentiment, indeed, what there, like the likelihood of price continuing with the trend or against it, and where the spaces are basically. I think maybe more support and resistance and where the spaces are. We never know for sure if price will go with the trend or if it will reverse. But in general, if there's no divergence present and price is breaking above the moving averages, then there's a high chance indeed that the sentiment of the day or the week will be up in that case. So yes. Now, if there's divergence, especially if there's multiple divergence and divergence on multiple time frames, then we could say that there's a chance that we'll head back to them and have reversals. So it's a combination of divergence and the moving averages, I would say. Slope is important too. That will help. The bigger the angle, the more likelihood of continuation indeed. Also, the gap between price and the moving average, like the gap between here's price and here's the moving average, and the gap between the moving averages as well. So from that point of view, it's kind of like a discretionary read on things. For the best view, it's a discretionary read. Makes things maybe a bit more difficult, but it's the best interpretation. Let's see if there's something better going on. Pound dollar is retracing, and let me put the moving averages on. Alrighty, pound dollar was in a great uptrend, and when you look at the weekly chart, basically it's quite simple. We have a very strong candle, a very bullish candle. So from my point of view, even if we reach the 140 like long-term moving average on the weekly, I don't consider that to be mega important in the sense that we could easily break a few hundred pips above it. This is a weekly moving average, so it's not going to be respected to the pip. But it does indicate perhaps that at one point we'll top out, which is not so surprising. I think a fib will help us more, and the minus 272 target, I think, is the main area to focus on at 161.50 for the upside. So going back to this candle, this weekly candle, very strong, in my opinion, quite a simple analysis by just simply putting a fib on that candle. And we could expect a bounce to 38.2, which is doing right now, or the 50 fib at 157. Quite simple, just one of those two levels I think will be the most likely turning spot for a move up to that 161.50. Alrighty, when zooming in, we can see that the price retraced to the moving average, and now it's trying to actually break above it, so we're getting more of a with the trend on the daily. 4-hour chart was already in a very trending mode. You can see price, the 21 band nicely kind of indicating the trend, few respects here, and then the bigger breakthrough. From a 1-hour point of view, we actually returned back to the 144. So we had this breakthrough here actually was a kind of closed the space trade, right, where we had a first break here. Take a look. And those first breaks are always there's definitely a potential for retracement. Look at these. You kind of have a small break below it. That, in fact, when it happens the first time, is not a selling spot. It could be actually a retracement spot, as you can see. All right. So once again, there are two reversal trades. One is back to the moving average. That's one. And the other one is to close the gap between the 21 and 144. But it doesn't happen the first time. Look at this. You get one back to the moving average. You get a bounce. The second time, that's when you get the closure here. All right, so that's important to remember that when it dips down below it the first time, it's not actually the best moment. It could be a retracement. Then we get a weak follow through, and for me, important was the top, the weekly high. We didn't break above that, and then when we closed again the second time below the 21, that is an important signal of a potential reversal. So from that point of view, The entry could have been here, and the target would have been, one of the targets in line would have been this one, or the 50 fib. All right, so from that point of view, we close the gap. Now, it doesn't necessarily mean we cannot retrace lower. All right, it doesn't mean, because it could still use the 21 band to move down to the 50. And you can see these moving averages converge even more, and then we bounce off the 50, and then price will start to break above the 21 band and hook back to it. Something like, for instance, let's see, something like this. Above it, hook back to it, and go. How do you know if a bounce will happen? Well, typically, many fibs will get some respect. Many fibs will get, for example, some 30, 40, 50 pip bounces, depending on what time frame we're looking at. So typically, many fibs do get a respect, some kind of reaction to it. At least 2 out of 3 fibs, I would say. Not everyone, but a lot of them. But whether this is the exact turn for upside or what we get when we're kind of retracement lower, that's something that is always remains a bit of a question mark. That's kind of the game with fibs. That particular game is tough because we don't know. The deeper the fib goes, the deeper price goes, the more likely it will become the turning spot. 38.2 fib is quite shallow, which is not untypical for the current spot. So one could take a long here, but it depends where the stop loss is. Is the stop loss placed below the 50? Of course, it's annoying to live through a retracement that goes that deep, but technically still a correct stop loss. If a stop loss is used here, that's a tight one, and it's risky in the sense that a trader is vulnerable to that retracement. But the reward to risk is better. If both those options don't seem that interesting, the alternative would be to wait for a breakout, basically. A breakout, I would say, above 158.30 here. These tops probably. Let me take a look. Probably I would want to see a break and then a hook back to the same moving average band. Because then when we break above magenta, these moving averages will start to point up. And I would like to see there will be a gap. I know it's maybe difficult to envision, but price is going like this, okay? Price will then retrace back, and the moving averages will be here, okay? There's a gap between price and the moving averages, which is good. We'll see momentum. And I would like to see a retracement back to those same moving averages for a bounce. That would be the alternative for a long if trading the fib, a shallow fib like that, is not interesting for whatever reason because of the bigger stop loss, or if you don't want to use the recent bottom, which has its risks as well. That would be the alternative, to wait for the breakout. The other option is to wait for a move down to the 50 fib. It might not happen, but if it does at 157, it could be a good bouncing spot. The other alternative is to see how price respects this resistance, because there could be a short potential to 157 if it doesn't break above here. Let me put on the Camarilla. We reached the L4, so this could be a hook back for that downside. The moment we're just retracing this this bearish 4-hour candle. I think a good way to measure it, this is for those that joined last Wednesday's strategy webinar where I discussed time factor, which I will probably do again tomorrow. This is the fifth candle. So I'm actually pretty interested to see how this fifth candle will look like on an hourly candle. If at the end of this hour, this candle is bearish, then I think there's a pretty decent chance of that follow through to the downside. Either this candle or next candle. So I'll keep an eye on these two candles to see whether this is a hook back for more downside. I think that's my plan. If it doesn't look bearish, then I will wait for the break, pull back. From a moving average point of view, by the way, what often happens is that when you get a break with momentum spiking through the 1 hour 21 band like this, you will see a pullback again, at least at the beginning. Here, for instance, spike through it. That was not much momentum here, by the way, which would make me a bit leery about this one. But this one is okay. You see, as long as there's a bit of a gap here, this one is okay. You see, as it distance itself, it's better. Here, there was not distance, so that was a warning already. Here too. But as long as we have some distance, like here, and even here a tad, and here a lot, when it really gets a lot of distance, then often enough the retracement will be shallow, like it was here. Now this will not last forever. Eventually you'll get divergence and you'll get a bigger correction, right? At the moment that you have divergence, the target is actually the long-term moving average. Now in a lower time frame, you might want to wait for a double divergence before thinking about that, by the way. All right. So anyhow, the spike above it, above this moving average, it will be a spike that we'll find exhaustion most likely, and we'll move back to the 21 band to find support at that. That's basically the idea. So I hope that makes sense. Yes, where to buy. So basically around the daily pivot point, I would say, but after the break to, let's say, the daily R1. So if it moves up to about 158.75-ish, let's say, and then a retracement to probably about 158.25, 158.40, 50. Long-term moving average, it's this one is a 136. No, this is 144. Okay, it's a 144 EMA. I mean, I use 136 and 144 almost like very interchangeably. It's anyhow a small difference. 144 perhaps a bit better because that is actually the fib sequence number. All right, so let's move on. See if there's anything else that that makes sense. Dollar yen is at a break or bounce spot. It's a range. It's actually a range potential kind of trade. Not so good for moving averages, but if you are a trader that likes to trade off ranges, likes to trade bounces kind of off of support and resistance within a chart pattern, that this could be a good short from that point of view. It's a bit early. This is only the third candle. Personally, I would rather wait for 5 candles not to break this high, because at the moment it's still riding a momentum to the upside. If you're a breakout trader, then I think it would be good to wait for either a break below support here for downside potential, or if it does break to the upside, I would probably not take the break itself personally, but it is possible to take the break, take the trade above this candle high, for instance, and then trail stop quite tight these candle lows, because it might make a momentum burst and then it could be kind of a false breakout. So to avoid any serious damage or too much damage in this momentum breakout, one could trail stop it tight so that if it closes and reverses like that, you get it out at a good spot. AUD in my recap video yesterday, my plan didn't really work. It didn't get a bounce here, unfortunately. We actually got a retracement like that. So let me take a look what's going on. One of the disadvantages perhaps of the entire AUD is just that if you look at the moving averages, what does it tell us? That it's quite yucky. So perhaps that could have been already a bit of a warning, but let's take a look at the daily prices. Moving average band is flat. So yeah, we had like a momentum away from the moving average. Then we had a retracement, trade one, retracement, trade two, a bounce off the long term. But you can see it's just ultimately didn't really have any power here and didn't succeed. Probably, I would say part of the lack of power to the upside here had to do with the entire choppiness that we see on the AUD. One of the reasons why, if you want to trade away from the moving averages, a trending environment is important, because otherwise there could be not enough energy. So this is how you can use kind of the psychology of moving averages to identify if it's support or resistance, to identify what the space is, if there is enough momentum to trade away from it or back to it, and use it as a sentiment. And there was one thing I wanted to add to that, but now I forgot. Support or resistance, the space. Yeah, and of course, you can look for setups away or back to them. And away from them, you're going to have, depending on how big the trend is, you can have a couple of those. Eventually, of course, it's not going to keep going on forever and the trend will stop. But typically, you'll see a couple. You'll see, if it's a good trend, you'll see probably three at least, just based on the wave analysis, right? You would probably see a wave 3 and a 5 bounce off of them. So that's at least 2, often enough, but sometimes more because you get extensions. All right. So you don't need to know the waves, but just realize that if you already have in mind that there are at least 3 waves, of which 2 will be aligned with the moving averages, and you have extensions, then you know that 2, 3, 4 are possible without even having to know all the details about waves. Okay. All right, let me move on. I know that this is a lot of almost more of an educational webinar, moving averages. It was not my intention, it just happened to be so. Um, let's take a look at Kiwi. Kiwi is moving nicely. Kiwi is weakening against the Aussie as well, has been moving up. The Pound New Zealand is moving up. Pound New Zealand moved up a lot. Actually, last week, when we were looking at the time factor rule on the Pound New Zealand, it shot up. The fifth candle was bullish. So, and the momentum did continue. It went up another 200 pips after that. It was quite amazing. So there's a lot of Kiwi weakness in the market at the moment. Could be good to look maybe at the Euro. No, Euro New Zealand is actually not good. Sorry, there's Euro weakness at the moment. So perhaps this Kiwi dollar, but how much momentum could we expect though? It's kind of like slowly but surely pushing lower and lower. That makes it a bit difficult to trade at the moment. And these divergences between these bottoms doesn't make it that appealing. Makes the New Zealand dollar perhaps a bit difficult. That's the thing. If you have multiple divergences, it's nothing wrong with trading away from the moving averages in most cases. But eventually you're going to get a bigger retracement, perhaps to retest this long-term moving average, for instance. We got most likely double divergence on the hourly chart. which for me is enough reason to be cautious with downside. If it does retrace back to the long term, like 69.25, that could change things. Or perhaps even all the way up to 70.50, 70.75, sorry, the long-term one on a 4-hour chart. I would be cautious. I mean, I'm not saying it cannot like follow through a bit more, maybe 20, 30 pips, 50 pips. I mean, it could be definitely some potential still there, but that's really only very useful if someone's in a short already, I think. Because then you can just ride the tide. You can just let it go and just trail stop and perhaps look for a target. But to start looking for shorts with 4-hour divergence and double 1-hour divergence, I think as a rule of thumb, right, I look at two things, or moving averages and the divergence for estimating the likelihood to follow through. So that makes it a bit difficult. We could use fibs to identify potential targets if one is in a short, for instance. Could be this minus 61.8. So let's see, there could be some space, but it doesn't mean that that space has to be filled right now. It doesn't have to necessarily move lower. And so for me, that's caution. Let's see. Let's take a look at the dollar CAD. Looks a bit choppy. Let's find a currency pair that makes a bit more sense from a moving average point of view, whether it's aligned or not. It doesn't have to be necessarily aligned. It could be a reversal trade too, as long as there's not a range or choppiness. That's basically, and that fortunately is the case with the dollar CAD. The dollar Swissy, there is potential trade back, but it's very close to the long-term moving average already, actually. Euro pound, perhaps. Euro pound could be interesting. Price is below both sets of moving averages. It closed below the 21. It broke below this fractal. It broke below the 21 EMA there on the daily, and it's below the 1 hour. So now it's a bit too late, as you can see, because of the, I mean, this would have been a breakout on the hourly, or otherwise even the candle close here. So a bit of a hook back to the EMA could be an interesting short. Probably the 38.2 fib or the 50, 61.8, any of those three. Stop loss above here with this minus 61.8 target. So the euro pound is something I'll put on my list for the moment. Otherwise, I don't have. Yeah, and the pound dollar. So those two seem the most interesting at the moment, I think. Moving on, euro yen choppiness. From a 4-hour point of view, you can see that the gap, there is a bit of a gap, makes it a bit questionable. There was some gap, here no gap. Big gap, getting smaller. Angle flat. So from that point of view, a close below a close below this band and a break below perhaps this fractal, which we already had actually, could signal a retracement and close the space trade here, from here to perhaps here. Now, you have to be aware that sometimes the long-term moving averages can be missed. So it's also good to look at the horizontal support and resistance. In this case, horizontal support comes in at 138. And the moving average too, by the way. So there's confluence. So that could be a kind of reversal setup actually, from a 4-hour point of view. 1-hour point of view too. 50-minute point of view, actually moving averages are already aligned. So from that point of view, a candle close, I would say a candle close not too far from this high, because from this low, because if there's a big bounce, if there's a doji, it doesn't look that interesting. It doesn't look like there's a good break. But if the candle closes near the low, obviously it will close below the 21 band too, then a reversal trade on the 4-hour chart seems a decent probability. You see, the pound yen is different. Pound had a lot more strength. There's a lot more uh, power to the upside. You can see good move away, a move away, a bit less, um, a bit less, but still using all the time, a bit more here, but using that 21 band all the time. And here recently was actually a very big move. So if anything, the pound yen looks ready for a continuation, if anything. And a breakout to the upside is probably more interesting than a reversal trade, because obviously there's no reason to think about reversals with such a momentum and such a trend to the upside. So if there's any yen weakness, pound yen is good to the upside. If there's yen strength, euro yen to the downside is better. Trading, by the way, the pound yen could be done on a lower time frame, by the way. One thing that personally I would like to see is a break above 195.55, the 4-hour resistance. And I would like to see this push away from the moving averages and then hook back to it, hook back to an angled moving average like this. So I want to see that momentum on a lower time frame. Let's see, I got some questions from earlier ago. Let's see, do you usually consider other main pairs situation before entering a trade? AUD-USD trade, do you look at what the euro is doing? Yes, I normally actually take a look at the general market and then try to find the currency pair that seems to be set up with the weakest and the strongest. Preferably, that's the ones we want to match. So if euro is showing weakness against multiple currencies, and we see that pound has strength against multiple currencies, then perhaps instead of trading, perhaps then the euro pound actually could be a good combination, for instance. So I try to indeed get a broad feeling, first of all. Let's see, cable monthly R1 is at 157. You think cable will not try to test monthly pivot at least? Yeah, it's possible. I occasionally look at pivots, and but it's not something that I have strictly like monitored how many times it retests. So I just because a monthly R1 is there, I would not have confidence to make a statement that it must retrace the R to the R1, for instance, or this S1 probably you mean. Um, I could just say that if it gets there, there's another good reason that it will bounce there. But the last candles look very small. So let's take a look at the 4-hour chart. Yes, they do, but they are hovering right above this 21 EMA and using it as support. So this is basically kind of a foundation. It's kind of like a base off of which price can bounce and start to make that momentum, but it hasn't yet made that momentum. Something like, for instance, here, you see the break above it, kind of like small candles, but boom, pull back, boom. So if the small candles happen above the 21 EMA, it does not necessarily a sign of exhaustion or problems necessarily, unless there's some other things going on, like divergence. Um, if price has already retraced below the 21 EMA, let's say price has divergence, it went through the 21 EMA, then broke above it, and is then showing small candles. Those two things would definitely change it. We don't have those two, so for the moment, I don't consider that to be much of a problem for the pound yen. And I'm actually looking for continuation to the upside. But I do want to see that momentum burst, first of all, to know that we are indeed have that potential for following through. Let me take a look at the sentiment trader here, just out of curiosity. On the pound yen, oh, this is the euro dollar, so let me change that. Let me take a look at the euro yen. Yeah, there's more shorts. I don't see the pound yen. Let me take a look at the dollar and then more longs. Alrighty, euro odd is looking pretty much the same as the euro yen at the moment. And the pound odd probably looking much very similar to the pound odd. The pound odd looking very similar to the pound yen, sorry. Actually, there's probably a bit more. No, it's about the same. Well, actually, pound odd probably looks a tad more corrective. We did have an impulse here. If it does move down and if it does go with the euro yen first, it could be good to look at the minus 272 target for a bounce. That could happen with the pound odd too, by the way, if it does correct lower and it doesn't show any momentum to the upside. Because both of these breaks are a bit slow. So if it does correct, targets could be the answer, the bounce. Pound New Zealand is really riding those moving averages at the moment. Let's see. Well, it looks good for longs too, but I do want to see on a 30-minute chart, for instance, a gap here. Now it's too choppy. I'd like to see something, same story, break and pull back basically. But as we go along, we see more and more that pound is strong and euro is weak, relatively. CAD yen seems to be are choppy. Same for the odd CAD. Not much difference between the Aussie and the CAD at the moment, but the odd New Zealand is pushing up. Pound New Zealand could be the best one. We see New Zealand weakness, but there could be, we know that the New Zealand could be a bit oversold at the moment. All in all, perhaps I think Euro Pound could therefore, I mean, if the Euro and the Pound are lined up, then perhaps the Euro Pound, one of the interesting ones. Pound dollars, possible both ways, and the Euro Yen or Pound Yen. Euro Yen for downside, Pound Yen perhaps for upside. Pound Yen would need to break, Pound Yen, Pound New Zealand would need to break and hook back, and the Euro Yen needs a 4-hour candle close near the low. And the Pound USD, I'm looking at this hour, next hour's candle. And the Euro Pound, to summarize it, I will be looking for a pullback to any of these fibs. Maybe even looking on the 50-minute chart, see how far it can get, and look for some turnaround at these fibs. That seems to be probably the most interesting at the moment. Dollar yen for those that like bounce trades. So that's it. That's the recap, I think, for today at the moment. Any questions regarding moving averages or what I'm looking for today? In the meantime, let me show you the webinars we have this week. Nanette had a weekly recap yesterday. Tomorrow, we're going to take a look at strategy. Same time, same place. In Wednesday evening, Nanette is going to take a look at do you have the right habits for trading? And then Thursday evening, Nanette and I are going to take a look at practical tips for combating fear in FX trading. This time, trying to emphasize on things that we can influence a bit easier, we can impact easier than maybe more theoretical ideas or more deeper kind of consciousness elements or unconscious elements within like fear and combating fear. Some of these things about why we fear, are interesting, but what do you do about it? How can you improve it? So we'll try to make it as concrete as possible and more of an action-oriented focus than more like, let's say, theoretical. So that's the lineup of this week. I hope I didn't bore you too much with moving averages. I know that I scared some webinar viewers probably with a lot of theory about moving averages, but let's see. I got one question. If euro is weak, isn't the problem that you end up with mostly every trade is a euro short? Yes. At the moment, when we look across the board, uh, we're looking at actually quite similar set of situations. Indeed, that euro is about to close the space between those moving averages. So it looks more like a reversal trade on most of them. Even the euro dollar, right? So we have basically it's making that, closing that space. So probably the best is to look for the strongest pair currency. Pound is relatively one of the strongest at the moment. Therefore, I think maybe the euro pound has pretty good papers today. I'm not a big euro pound fan, actually. I'm the opposite. But in this case, it seems to make the most sense. Yes, I use the awesome oscillator indeed in combination with moving averages. Yeah. Moving averages for understanding where is support or resistance, understanding the angle, understanding space between price move and between the moving averages, knowing if it's a reversal setup, if it's a trend setup, what are the other time frames saying, what are the angles of the moving averages. So there are a lot of things you can look at. I know that that's not maybe easy to incorporate in an analysis. You could maybe make a checklist otherwise. So all in all, they're quite, diversified or quite useful tools. They can even be used for exact trading, waiting for the push, the break above the moving averages, for instance, the close above it. For just to give an idea, here's a close above it. Let's say sometimes you want to wait for a dip like this before you take the close above it. So if we do that, then these would be potential entries even. One could do that with moving averages. Sometimes not the best entry like this, but it's possible. Moving averages are maybe not the best trading tool, but it's not impossible. But it's more of a breakout. You're not going to get a pullback, let's say a pullback discount kind of deal. It's going to be more breakout trade. All right, that's a pound dollar. Sorry for hourly close. You mentioned next two candles to the side. Could you repeat that? Yeah, what I mean is that preferably I want to see, because this is fifth candle. So the move down, I would like to see within this hour or next hour. So if it has a bearish candle this hour or next hour, I think it's worth a short with a stop loss probably above this high and targeting 157-ish, let's say 157.10 perhaps. Let me check where that fib is. Got to be careful of the 35 level actually too. So two targets. It could be 35 or about 157.10-ish. 60/90-ish. 40 risk. One way of trail stopping is, good question, Caitlin, is actually using these hourly highs. Most of them should provide a good protection. Especially if it's a strong bearish candle. Then, especially then, a trail stop above the candle high is useful. This is a bit risky because the pound dollar is in a generally uptrend. So from that point of view, it also makes a lot of sense just to let price make its downside and then try to look for longs, in my opinion. And it's less risky. Or let it break up, hook back, and look for longs upon the pullback. Especially with the fact that we already hit the long-term moving average on the hourly. Something to consider, maybe not taking it, even if it does happen. So from that point of view, perhaps the euro pound, let me take a look again, euro pound. downside, your yen downside or pound yen or pound New Zealand upside a bit better. Maybe the euro pound actually market order would not be that bad, I think, because I think that if it pulls back, there's a decent chance of a follow through. I would do 71.48, 50 fib. When does the Euro news actually? If you don't like the Euro factor, of course, because the news events potentially, I mean, the negotiations, oh, the Euro news is behind us. Okay. Then it could be good to look only at the pound instead and skip the Euro side of things. That does make sense as well. 71.48 is what I have, 71.83. Leave the TP open for the moment. And I'll probably trail stop the 4-hour candle if there's a good, yeah, probably trail stop this 4-hour candle. Let me see what the main target would be. Probably the 71. Which doesn't give it a lot of space actually. Tad more than 1-to-1. Maybe I'll move up the entry just a tad. Let's see. I'll move it to 56. Put the target, I will probably put a target 71.04. Something like that. Doesn't have to be a pending order. It could also be a market order and just see where price kind of shows exhaustion on a 50-minute chart, 50-minute candle somewhere in here could be a good short, in my opinion. At least the reward to risk is there. Yeah, this candle is dropping fast and using the 21 band now. Of course, it is an uptrend, so we don't know for sure if it will do that because of that factor. But if the candle closes, hi, does anyone hear me? Testing, testing, 1, 2, 3. Oh, good. Said that the audio was lost. Good. Cool. So yeah, I mean, from that point of view, it is still a risky one, but if it candles something like this, it does make it a decent probability that a reversal kind of continuation or retracement continuation will happen. Alrighty, folks. Well, I hope you enjoyed the moving average explanation. This is in any case how I use it. It's maybe adds up to a lot of discretion, but as I think as you get more experience in it, you will start to recognize it, situations a bit better. Just keep an eye that spaces between the moving averages and price are important. Divergence, the angles, where's price, the relationship to it. Is there with the trend? Is there reversal potential? Look at different time frames, and then at least it gives a very good, I think, a good idea about the trend, and the structure of the market, and that could be used to have an idea about where to trade it and how much to expect. And then one can still use different tools for exact trading purposes. All right, so that just to give you an idea how you can use it. One more time. Bjorn is saying my EA will take that trade when the 4 hour closes, sorry, so you can feel totally safe. Cool. Let's see, 4 hour world. Yeah, if it is closing, indeed, it would just retrace this bearish candle. We can see a bit of a dip, a follow through of that dip. I wouldn't expect a lot just because this is the first dip below the 21. Remember, we said the first dip is the one to be cautious of, especially if there's no divergence. There is no 4 hour divergence, which means that probably the dip below the 21 band on the 4 hour chart will be limited to indeed the 50 or 61.8 before we should see a bounce. Doesn't mean though, from an intraday perspective, indeed that potential is not there. I would say at this 4 hour world, and Björn confirms it, so that's good. But from my perspective, because it is a retracement, still a tad riskier than trades that are going away from the 21 and away from the 144. But it's good to know the EA would confirm it when the 4 hour closes. Sorry. Cool. Well, folks, thanks so much for being here, and hope to see you in tomorrow's webinar. We're going to take a look at time factor the second time, and curious if anyone by any chance used it, or if you didn't follow last week, I'll explain the details tomorrow. Oh, Peter was joking. Okay, it was a joke. So then ignore his advice. We'll take a look at time factor and habits Wednesday evening, and combating fear on Thursday. So that's all lined up. Oh, Björn did add that he will take the trade actually. So let's see. Hopefully, he will make that. What is it? About 50 to 80 pip dash. Cool. Make sure to take a look at the Supreme edition. It is right here as expert advisors. You can use all kind of different tools. Very cool. Take a look at that. It's a lot of add-ons compared to the normal MT4, and take a look at maybe some technical analysis. You can find good info there too. Add out our markets. I'm sure that Nanette or Anil or Harish will be posting there soon as well this week. So take a look at that. And otherwise, wish you good trading. Cheers, everyone.